Good afternoon, everybody. Phil Simons with Columbia Grain here, and your Friday afternoon weekly grain market recap. Well, we're going to go ahead and dive right into it. As there was a full week of trading on tap here this week, and it's now in the books. But we did have a little bit of volatility in the overall futures markets and cash markets. But we continue to see a little bit of uncertainty, quite honestly, stemming from the global trade and what the potential implications could be on any tariffs that could come into force and into effect. But we did see that President Trump actually issued a delay in the tariffs on goods from Mexico and Canada that are part of the USMCA agreement, which did include ag products as well as potash from Canada, and really going to be delayed until about April 2nd, when he does plan to the global reciprocal tax or tariff to go into effect. But with that, again, just continued to add a little bit of uncertainty to the market, and we did see the markets really kind of whipsaw around this week. But I'm going to share my screen with you again, and we're going to dive right into it once we get over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to go to the Producer Solutions tab. That'll take us over to our Producer Solutions link here. But again, we did wind the week out here. Looking at the export sales report that was issued yesterday, and we continue to see fairly decent numbers really coming in at the higher end of the expected ranges for corn, coming in at 35.8 million bushels sold last week from an export sales standpoint in the U.S. Soybeans, on the other hand, were a little disappointing, coming in at the lower end of the range, coming in at 13 million bushels there. And all wheats kind of coming in, quite honestly, right at the middle of the road in terms of where the pre-report estimates had us coming in at. And we came in at 12.4 million bushels sold last week. And then you can see the by class breakdown with spring wheat selling 3.8 million bushels there. Hard red winter wheat accounting for 5 million, soft red at 2.8, and soft white coming in at 900,000 bushels last week. So again, kind of middle of the road for all wheats, really at the higher end of the estimates for corn and at the lower end of the estimates for soybeans. But once the dust settled here this week, kind of taking a look at new crop, continuing to focus on the opportunities out there, in terms of what we're seeing in the overall price ranges and in the weekly changes. For Dees 25 corn, we actually saw a 16-cent range. But when the dust settled here, we were actually had a net zero weekly change. It is going to be interesting to see what the Commitment of Traders report comes out with here in about an hour and a half, in terms of what the funds have done to their position in their overall length that they had been building. Which will actually come from Tuesday to Tuesday. So today's report will actually say where their position was as of Tuesday from this week. So that'll be definitely interesting to take a look at just to see what they did to their overall position. When you look at new crop beans, NOV 25 beans, we had an overall range of 38 cents. We actually closed the week out with a net loss of 5 cents. In Kansas City, September, we had an overall weekly range of 35 cents there, and we had a weekly change of a net loss of 12 cents. And then in Chicago, September, we had a weekly range of 30 cents and a net loss of 7 cents once the dust settled here today. And to wind everything out, we had Minneapolis, September, having a 25-cent range and closing the week out with a net loss of 9 cents. So again, just trying to, definitely shine a light on in terms of why we should have our new crop working orders out there, just to try to take advantage of any potential knee-jerk reactions that we see. Now, when you do look at the wheat complex, we have taken it on the chin, quite honestly, over the last couple of weeks. And in the September contracts, we really are getting fairly close to the life of contract lows. So not saying that there couldn't be some kind of a snapback of some kind in the wheat complex, but we just really need to be ready to potentially take advantage of any of those knee-jerk reactions that we do see. Other than that, I do want to share just another little tidbit for whatever it's worth, and just take it for whatever it's worth as a grain of salt. But if you're familiar with the voice from the tomb, an old trading adage from way back when, we do see that the voice from the tomb did have some fairly important dates, from a historical standpoints. That we do see that the voice from the tomb says that we should be buying May wheat futures on February 22nd and we should also be buying July corn futures on March 1st. So we are past those days by just a couple days here. Now, if you were to actually execute on the days that the voice from the tomb says that we should, we would be having a loss, right, on the on getting long at those futures values. But at the same time, again, it's just an old adage and something to take into account and with a grain of salt for sure. But again, if we do see any kind of a bounce, in terms of planning intentions and things like that that are around the corner, be sure to have your orders out there. Be sure to have them working for hedge to arrive orders, accumulator basis contracts, whatever it may be. Just be sure to get a hold of your local managers and your buyers and get those orders out there and get them working just to take advantage of these knee-jerk reactions that we could potentially see on the horizon. Other than that, we're going to go ahead and wrap everything up for the weekend here. I hope everybody has a great weekend. And remember, when the plate of cookies goes around the table, be sure to grab a couple. Have a great weekend, everybody. We'll talk with you next week.